Hey y'all, Zach McDonald, your real estate agent with Real Property Associates. And today I want to talk about housing affordability in Seattle as interest rates have been climbing. Many of you know, especially if you've been following along with the channel for a while, that interest rates, mortgage interest rates, have been on the rise throughout the year. And people who were maybe thinking about buying a house a year ago or bought a house a year ago might have got a rate in the threes. Now we're looking at rates in the upper fives into the low to mid sixes, depending on people's situation. So I think the news, as you hear it, you think, oh, that's a massive jump. And it really is a big jump in interest rates. I think as we start to consider how this impacts and affects people in higher price markets like Seattle, I think it's important that we're looking at some of this data and putting real numbers to these percentages, because although interest rates have gone up considerably, the actual dollar amount isn't as substantial as it might seem. It might seem that interest rates have almost doubled, but the payments haven't doubled. So I think today I want to talk about the rates, where we're at. I want to talk about historical rates, and you may have heard me talk about these things. So if you want to skip the first few minutes here of the video and kind of fast forward to the later section, we'll talk about what the payment difference looks like for a 20% down conventional loan on a $1 million purchase, what that max 10% down conventional loan looks like, which is just under $1 million. You can't quite get to $1 million following the conventional standards with 10% down, but almost. And then what 5% max conventional loan looks like. And we'll talk about those payment differences as we see interest rates continue to climb. So today, as of today, June 29th, recording this video, mortgage rates, according to Mortgage News Daily, one of the few sites that I follow that does surveys of loans across the country, 5.9% for the 30-year fixed rates, according to their survey and data. And that is slightly down from yesterday and a little bit down from a couple weeks ago when we were up into the low to mid sixes. Historically speaking, though, where are we at with mortgage rates? Historically speaking, since the 70s, when we're tracking this data, 50 years of data, 7.77%. So that's the historical average over the last 50 plus years. And I think when I talk to people that are older, they bought their first house in the 70s, 80s, even early 90s, they're like, wow, like my first interest rate was blank. So they have this perspective of, well, interest rates are coming up, but they're still relatively low compared to what I got. I think when we're looking at interest rates now and we look at where they were, we go, yikes, this is a big jump. So I think some of it's perspective. So for some people who have bought and sold homes before, they're like, okay, interest rates are up, my payments are a little higher, I can afford it, no big deal, right? And they might think at some point they'll refinance. Now, if we look at historical data, we'll see that interest rates were way, way higher in the past, and they've trended down, but still, we've bounced back and forth into the low fives off and on, with rates dropping into even the twos a couple years ago. So we had some pretty low rates here recently, so I think there's a little sticker shock, at least when we think about percentages, but sometimes I think it's really important to take percentages and put them into actual dollars. So I want to show you and just illustrate what this looks like. I don't think I have there's no like agenda with this video. That makes sense. I just really want you to see the numbers because I wanted to see the numbers. So if we're looking at a $1 million purchase, so we'll look at that first $1 million conventional purchase, 20% down. And I'm going to share these quotes. These were prepared for me by a great loan officer in the area. So if you are thinking about buying or want to talk to somebody about financing, I can hook you up. But these are as of today, the 29th. Again, they're not rate quotes specifically towards anybody. This is just a general, generic, hey, assuming decent credit, $1 million. So this isn't any rate quote. I'm not a mortgage loan officer, so I just want to make that super clear here. So $1 million, loan amount $800,000, conventional 20% down. So if we're looking at a rate of 3.5%, and then I'm here illustrating what some of these different rates, 4.5%, 5.5%. Right now we're closer to 6%, so 6.5% is a little higher than what some will get. Some might, especially if you're getting a condo, get a little bit higher rate. But assuming single family, and kind of keeping this all constant, we're seeing a delta of $1,464.18 on $1 million purchase. So an $800,000 loan amount, there's a delta of almost $1,500 if you want to round up for a 6.5% rate, again, versus a 3.5% rate, which is a big amount of money. I think for a lot of people that can afford $1 million house, and this is confirmed in conversations with some loan officers, there's the ability to do it, right? Most people aren't pushing their, especially at this price point, pushing their debt to income ratios up to the maxes. So there's the ability to do it, but it doesn't necessarily make it a comfortable payment. So I think those are different things people have to weigh. But when we put dollar numbers to it, the percentages, it's closer to like 25 to 30% more on a payment versus double, right? When you think of the interest rates being almost double, the payment is not doubled, but it is more. So I think seeing those numbers here on the 20% down, it's not that much different if we look at a 10% down. So it's a little bit different, but not a lot different. So somebody putting 10% down with their max conventional mortgage, $990,000. The loan amount there, $891,000 loan, 3.5% down versus 6.5% down, all right, is a $1,630.74 savings. So if you would have got a mortgage at the same amount a year ago or a year and a half ago, you'd be looking at quite a bit of a savings there. But again, not a huge difference between the 20% down and 10% down. Now, I expected personally this to be a little bit bigger of a delta, just given that you're leveraged a little bit more. But the loan amount's not that much more. It's $91,000 more on this loan versus the one we were just looking at. So that's where that additional money comes from. But still, if you're buying $1 million house, in a lot of cases, this is still an affordable jump. It might mean that you're not saving as much money or investing as much money elsewhere, but still something that people can afford at this price point. Now, if we're looking at maybe you're getting a loan amount of $500,000, right? You're going to be cutting this number, this delta down considerably. But at these price points, the $1 million price point, which is about the median in Seattle proper, less than maybe if you're on the east side and maybe a little more than if you're in Snohomish County. But again, just kind of a good ballpark for people to reference. And then I think if we're looking at the 5% down option, it's almost the same as the 10% down because that loan amount stays the same. So you have the max conventional loan amount, and so it's slightly higher. It's a $1,630.92 delta versus that 74-cent difference. So you've got like, what is that? Oh man, sometimes math on the fly is hard, but like, let's just say 15 cents difference on the 5% versus the 10% down option. Again, because that loan amount is the same. So I hope this is helpful just to get a little bit of a framework. For me, I think it's helpful to look at dollars versus percentages because I think when we look at percentages, it sounds bigger than when we look at dollar amounts. Now, these are real dollar amounts. So for some people, this will be more substantial and impact you more and affect you more. So I think it's important for everybody to analyze their own situations as they're thinking about buying a house. That is a real thing. I know when we refinanced, so the house we're in Edmonds, we got with a 4.25% rate and ended up refinancing to 3.25%. At the time, they ended up going down into the twos, and I was like, oh man, really? I got such a high rate compared to other people. Now I can look and go, oh yeah, that's an amazing rate, right? But I think we got spoiled a little bit with low rates. Now I'm pumped that I have the rate that I have. But it did knock my payments down $400 or $500 at the time. Which is substantial. So as we're looking at these numbers, rates likely won't stay where they're at forever. They'll probably be, as there has been the trend downward, a opportunity to refinance. But right now, if you're considering a purchase, you're probably looking at a rate like this here for the next 6 months to a year is what I'm hearing from a lot of loan officers that I follow and talk to on a regular basis. So I think there are, and what we're seeing in the housing market already is there has been a little bit of a slowdown. Houses are sitting on the market for a while. We're seeing price reductions. I think there's going to be some opportunities for some people, right? Not for everybody. It doesn't make sense for everybody, but I think there's going to be opportunities. Payments will be more. They will. They'll be more. but there may be opportunities to get a better price and then at some point get a better payment when interest rates go down. So I think if I'm a buyer, or I'm probably not refinancing right now unless somehow I still have an 11% rate. So if you're out there, this is your chance to refinance. But I think if I'm somebody thinking about buying and I can buy now, I think there are going to be opportunities to get a better price maybe than what people were paying in the early spring of 2022. But then also at some point down the line, maybe that 6 months, a year, 2 years down the line, have an opportunity to get a little bit better rate. But again, still historically speaking, these rates are better than average. But I know that as prices go up, it makes those numbers bigger. So hopefully it's helpful to see these numbers. If you have questions, feel free to reach out to me. I probably won't be the best person to talk through individual situations. Again, I'm not a loan officer, but I can certainly connect you with one. And then, I'd love the comments down below. I love it. So feel free to reach out there and I'm happy to dialogue with you guys. But again, I hope this was super helpful for you. Thanks for watching this video about what's the payments look like, right? What do the payments actually look like as we talk about mortgage rates on the rise? If you have questions though about your situation, feel free to reach out and I'm happy to be a resource for you.